What happens when politicians start threatening the independence of the world's most powerful central bank? You don't just get political drama. You get market instability, currency risk, and a silent warning signal for crypto investors. This week, global central banks did something rare. They publicly backed Jerome Powell and warned against political interference. In the Federal Reserve and the implications go far beyond the U.S. Let's break it down. Reports surfaced that U.S. political pressure could escalate against the Federal Reserve, even raising questions about the Fed chair's position. In response, central banks across the globe stepped in, issuing a clear message: central bank independence is non-negotiable. Why? Because once a central bank becomes politically controlled, monetary policy stops serving stability and starts serving elections. That's how currencies break. That's how inflation accelerates. That's how trust collapses. Central banks exist for one reason: to make unpopular decisions when necessary. Raising rates when inflation is painful. Holding policy steady when markets beg for relief. Protecting long-term stability over short-term politics. If that independence disappears, markets immediately price in risk: higher inflation expectations, currency debasement fears, capital flight. And historically, when trust in fiat systems weakens, alternative assets benefit. This is where crypto enters the picture. Bitcoin was created as a response to politicized money. It exists because trust in centralized decision-making fails eventually. When global central banks feel the need to defend independence publicly, it tells us something important. The pressure is real, the risk is visible, and markets are watching closely. This doesn't mean crypto pumps tomorrow, but it reinforces the long-term narrative. Neutral, permissionless monetary systems matter more when political risk rises. This isn't about picking sides. It's about understanding structure. When institutions publicly defend monetary independence, it signals fragility in political financial alignment, sensitivity around inflation, credibility, and growing awareness of systemic risk for long-term crypto investors. This is context, not a trade signal. The big picture: crypto doesn't win because governments fail overnight. Crypto wins because confidence erodes slowly and alternatives quietly gain relevance. So no, this isn't drama. It's a reminder. Markets are built on trust. Money is built on credibility. And when that credibility is questioned, even subtly, the foundation matters. If you want more macro-level crypto analysis like this, grounded, calm, and signal-driven, subscribe, stay sharp, and stay ahead. Because clarity always beats noise.